do equities look overvalued, particularly when you compare them to the spectacular GDP fall we've seen? Ashish, so as the wealth manager in the room, since you have to allocate your clients' money both in equity, debt, other asset classes, gold, commodities, you have a kind of bird's eye view of the entire spectrum. So, how do you see this? Do equities look overvalued?
If you look at it, the typical investor mentality is to look at how Nifty is looking like. How's from what levels has it gone up to what levels? What is the price earning multiple of the Nifty? What is the price to book? And an investor makes a kind of a judgment whether the market is overvalued or not. It is for us to see that how many companies have contributed actually to this overvaluation. And even those companies which have run up, are they called overvalued, or can they actually contribute to the growth year on year? And therefore, I would agree with what our fund managers just said, is that you will have to look at each and every company at a time, and look at what are the prospects in that particular company, and not look at just the index or just a few stocks. So it has to be a broader market, and I'm sure as we go along, you'll find that there are immense opportunities even at these levels.
Renu, would you like to ask the second question?
Yeah, so Neil, my question to the panelist is related to one of the big changes brought in by SEBI in for multi-cap funds. So now the SEBI has, mandated multi-cap funds to invest at least 25% each in large, mid, and small cap stocks, which was not there earlier. So I want to understand how this change in multi-cap funds, which are of big size, will impact the markets. So Ashish, what are you advising to clients for the investors who are invested in multi-cap funds right now?
So see, SEBI is a very customer-oriented regulator. So approximately about 2 years back, SEBI changed the categorization of the scheme to make it true to the name, which means if it's a mid-cap fund, the key objective should be that the fund manager invests in mid-cap. Now, in multi-cap, what probably was happening, and that was within the objective of the fund, that there was a skew towards, say, large cap or mid-cap. So probably SEBI said it was not absolutely clear, which means that now SEBI might look at another category, and that's my personal view, which may be a flexi cap strategy, giving a customer a very clear view that the fund manager will have a clear call on moving between capitalization across whatever percentage. So it may be a 100% large cap moving to 100% in small cap. That is a fund manager's call. So this will just lead to some more transparency, and I think we still have time towards that, probably another quarter. Uh, I feel that as all fund managers said, I think it will be much smoother in terms of transition and more customer oriented. So I don't think it should be a problem.
Okay, so basically we can tell investors to, just don't make any knee-jerk reaction and maintain a status quo till clarity is brought in this matter. Okay, thanks for that. Neil, would you like to take up the next question?
Yeah. So the next question is something that's dominating the headlines, especially in the recent few weeks. So there are two sectors: pharma, which has been on a tear since COVID, broke out, and then IT seems to have joined the party. Um, I I had an IT sector fund which I sold 2 months ago, and I'm kicking myself. But with that in context, how are these two sectors looking? Have they run up too much? Ashish, so how do you see this, particularly in light of the risk? So one is the US immigration risk, and for pharma, there's the ever-present FDA inspections.
So see, to our investors, we would say is that to invest in any sectoral fund uh, is far more riskier than any of the diversified equity mutual funds. So If we are making a decision basis what we are conversing right now to invest in a specific sectoral fund, be careful. However, on the other side, I feel that on the IT side, even right now, the pool of profits of the listed companies is still the pool of profits of the listed companies is still more than the market capitalization. So, as a sector, IT still holds a promise. On the pharma side as well, and we look at it from a layman's perspective. Given the situation right now, I think after food, the common man thinks of medicine. So, pharma definitely is a good sector to be in as well. But again, I would completely depend on specific stock picks, and that's where our fund manager colleagues come into play. That uh, always the stock specific approach will prevail in a particular sector. Uh, we cannot generalize that as a sector all particular companies are doing well. So therefore, without a doubt, both the sectors are still promising, but a stock play is still important.
So the next question goes to the very heart of investing, which is growth versus value. So over the past several years, value internationally has underperformed, has struggled. Um, but on the other hand, we might just be at the point of a major reversal. So how do you see this playing out now? And where do you stand on this?
So, how we would look at it is one, what is the customer's risk appetite and how long is he okay to invest? Because, as what Vinal said, I think patience is a virtue in value investing. And therefore, when you're meeting a customer and understanding what the customer's risk profile and how long the customer wants to stay invested, you make a decision because it's not, as everybody said, it's not growth versus value. It's complementary, and in each customer's portfolio, there's a space for both. Uh, it's just the way the customer is oriented, what you have to judge, and then place how much do you want to place growth and how much on the value side.